Today, Bitcoin rises yet again while Wall Street surges. PayPal introduces a new yield offering for holders of its stablecoin. And Ian Balina of Token Metrics discusses the bearish signals he's seeing despite crypto's recent rise. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices extending their rally for a third day, with Bitcoin briefly touching the $94,000 level for the first time since March 3rd. At noon Eastern, Bitcoin had gained 2.4%, trading at $93,200. Ether jumped 5.3% to $17.94, and Solana climbed more than 4% after Canada-based Sol Strategies entered an agreement to issue up to $500 million of a convertible note to expand its holding of the token. Taking a look at a couple of stocks, as of noon, shares of Bitcoin miner Riot jumped 6.6% after entering a $100 million credit facility with Coinbase Credit to fund its operations and growth initiatives. Shares of Trump Media spiked around 7.5% after the company said yesterday it finalized an agreement with Crypto.com and Yorkville America Digital to launch a series of ETFs. Okay, let's talk about the top stories. SEC Commissioner Mark Uyeda joined CNBC Money Movers from the IMF World Bank spring meetings this morning to discuss some of the crypto-related developments at the agency. He served as acting chair after Gary Gensler's departure in January until this week, when the new chair, Paul Atkins, was sworn in. When asked how the agency would avoid a Wild West situation under a more lenient approach to regulation, Uyeda argued some of the crypto sector may not even fall under the SEC's purview.
We have learned from the experiments that have been done by other jurisdictions what works, what does not work. We're thinking about how we can use that knowledge to have the most effective set of rules that are cost efficient, that protect users of crypto, at the same time do not do anything to strangle the development of crypto of what we saw the last 4 years in the Biden administration.
Next, PayPal plans to offer a 3.7% yield to holders of its PYUSD stablecoin. The payments giant said users of the PayPal or Venmo wallets will accrue rewards daily beginning this summer, and they'll be paid out monthly in the form of more PYUSD. PayPal's stablecoin launched in the summer of 2023, entering an increasingly competitive space dominated primarily by Tether. Its USDT stable has a market cap of around $145 billion, comprising 66% of the market, according to CryptoQuant. PayPal's stablecoin, meanwhile, has a market cap slightly under $880 million, accounting for less than 1% of the market. Finally, crypto and TradFi industry heavyweights are teaming up to launch what they call a Bitcoin native company. The new entity, dubbed 21 Capital, entered a SPAC agreement with Cantor Equity Partners, an affiliate of Cantor Fitzgerald. The goal of the firm is to allow a singular vehicle for Bitcoin exposure, and the deal values 21 at $3.6 billion. Tether and Bitfinex would hold majority ownership of the firm, while SoftBank Group would take minority ownership. 21 will be led by Strike founder Jack Mallers and plans to launch with holdings of more than 42,000 Bitcoin. All right, let's talk more about the trends in crypto prices for our main story. Yesterday, I spoke with Ian Balina, CEO of Token Metrics, to learn more about the bearish signals he's seeing in the crypto market despite the recent rally. All right, Ian, well, thank you so much for joining me on Crypto World today. What do you make of Bitcoin's rise lately in the face of a weakening dollar?
Yeah, so earlier this year, crypto has been heavily tied to the macro. And for the last few weeks, we're seeing it to finally decouple from the macro. So we still believe, based on our indicators, that the market is in a bearish trend, although we are seeing a decoupling slowly begin to happen in crypto.
How are institutional investors right now playing the crypto market? Are they seeing it as a hedge against economic risk? I know that we have this debate all the time where, Bitcoin can be a risk asset in the short term, and then longer term, it can still act as that hedge. What are you hearing right now, or what are the investing trends telling you about how the institutions are playing the market?
A good question. I would say both, yes and no. Crypto early on, as mentioned, has been heavily tied to risk assets with stocks, equities, the macro, the tariff wars happening. So it's definitely been heavily affected. That's why there's been a very large correction in crypto. Crypto has been down a lot since beginning of January. Our signals turned bearish on the market, but crypto typically likes to move first. It's typically a leading indicator to any larger reversal in the markets. So I would say as crypto begins to slowly decouple from the macro, equities could possibly follow crypto.
So we are seeing a bit of that decoupling more and more over the last few trading sessions in stocks. You said that your signals have turned bearish. What would make them turn bullish again?
So our signals are looking at thousands of data points in the market, from market data to on-chain data to social sentiment, and they basically just give you a single grade of the market. And our signals have been bearish since beginning of January, 2 days before Trump's inauguration. We're seeing our indicators begin to slowly rise, but not to a level where we can finally confirm there's an actual reversal in the market. Although we think that's possible, we think the macro would have to slowly kind of cool off in terms of the tariff wars, but we do see a slight increase and decoupling from the equities market.
Earlier in this month, Bitcoin certainly was more vulnerable to the drops that we saw in the equities market, the macro kind of overshadowing all of the nice setup that we have in terms of regulatory tailwinds coming with the new administration. As we head into Q2, what are you watching? And do you think that we go back to seeing more enthusiasm and demand based on the narrative?
Yeah, so what we're watching for in Q2 are just the technicals, the market data, but also in terms of what Trump is doing. They expect to have pro-crypto stablecoin bills passing by, I would say, end of Q2. So they want to make crypto, or rather the US, the crypto capital of the world. When this happens, we think this will be one of the biggest bull runs in all of crypto. But there have been basically a lot of pressure from other factors, as mentioned, with the tariff wars and what's going on. But we think once that's over, we think a flight to risk assets will start to happen and crypto will lead the way.
Even in these last few weeks, as the price of Bitcoin has been struggling, it's been lagging gold until just a day ago or so, and definitely outperforming stocks. And for the most part, staying above $80,000. To what extent do you think that the crypto regulation is priced in? We did see a really big rally at the beginning of the year, and I think a lot of investors would argue that the struggling we've seen in the last few weeks is actually healthy. So to what extent do you think that regulation is priced in?
I would say it's not priced in all the time. Crypto is one of those markets that's very tough to price in all the time because it trades 24/7 globally. So it might be priced in a particular region, but it moves so fast on the news that it typically does lead the way in terms of any reversals or any changes in the market. So it's very hard to price it in based on news, based on what's happening with the macro, but it typically does lead the way. And that's why we use our indicators to try to understand what's going on, because it's very tough and very difficult for a human being to follow all these data points 24/7 all the time.
Well, one of the things I know Token Metrics is following is the role AI plays in crypto. What's the latest on that, and what does it mean for investors?
We think AI is the future. I was seeing what's happening with ChatGPT, with the newest models, O4 Mini, O3, basically have the IQ of a PhD student or a PhD candidate. But applying that to crypto, we think is the future, because crypto is open finance, and AI is basically the future. But how do you trade that in crypto? What we're doing at Token Metrics is we're building AI trading agents and AI portfolios for crypto investors to invest in that are purely on-chain, self-custodial, because as mentioned, crypto trades 24/7. It's very challenging to keep up with crypto as a human being, no matter how good you are, because it just moves so fast. And we think applying AI to that trading via trading agents is the future.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.